Starwood Hotels announced it's considering strategic and financial alternatives to increase shareholder value. I'm joined by Nikhil Bhalla, Vice President of Equity Research at FBR Capital Markets. Nikhil, this is a bold move on behalf of Director Adam Aron, who is serving as interim CEO after previous chief executive resigned in February. Shares of Starwood are rising on the news, so would you say this is a wise move on behalf of the company?
Yeah, absolutely. And actually, I would applaud both the board's decision and Adam Aron's decision to take this step. This is a very, very wise decision because the alternatives in front of Starwood, in my view, were very, very limited. If you tried at this point in time to kind of correct all the mistakes that have been made over the last 3-4 years in terms of trying to increase sort of EBITDA and trying to kind of get this company back to a good growth pattern, I think it would take a long time, and I'm not sure that investors really believe that there's that much room left in the lodging cycle to be able to execute on those kind of strategies. So I think in this particular situation, the sale of the company, in my mind at least, is probably the best option forward.
Also, sale of the company is the best option. Starwood Chairman Bruce Duncan said no option is off the table. So do you actually foresee this resulting in the company being acquired or maybe even splitting up?
Yeah, the way I think about this is the value in Starwood is really in the brands at the end of the day, and they have a lot of owned assets right now. Eventually, those owned assets can be sold off piecemeal, and that's what Starwood's been doing over the last 3 or 4 years or so. And I think that strategy completely continues. But the real value here is in Starwood brands. So think about the W, think about the Westin Hotels, think about Sheraton. That's really where the value is. Those brands don't really come up for sale very often, quite frankly, and I think somebody would be ready to pay top dollar to be able to acquire those brands.
So when you note that and note those brands and the value of them, is Starwood worth more to other hotel chains than it is to itself?
Yeah, well, so if you think about Starwood right now, what are the challenges they face? The biggest one that they're facing right now is the EBITDA growth is challenged. A big reason for that is that this is the most internationally focused company in our space right now. And clearly a strong US dollar doesn't help that. And then when you think about how these companies make money, one is organic revenue growth, another is adding more hotels to your system. The problem with the second part of that is that they don't have any brands which are seeing that kind of an incremental increase in terms of adding more hotels to their system. When you think about competitors like Marriott or Hilton or some of the others, where they're really adding a lot of hotels into their system are in the mid-price and the sort of smaller hotel segment category. That's where the growth is. And unfortunately, Starwood doesn't really have that option available to them because they don't really have any real brands in that category. So that's a big challenge to overcome, and I don't think this company can overcome that, at least over the next 2 or 3 years. And eventually, what does that really leave you with in terms of options? Probably the best thing is find a good strategic buyer who's ready to take this company out of the public eye for a while, fix all the strategy missteps that have been made over the last 3-4 years, and potentially bring it back again and in the form of an IPO, maybe 5 or 6 years down the line. And we actually have a template for that. I mean, you can see Hilton. Hilton's done incredibly well, and Hilton has really provided a good template of what is possible in our space.
Thank you so much for your insight, Nikhil Bhalla, Vice President of Equity Research at FBR Capital Markets.
Thank you for having me.
And I'm Brittany Umar for The Street.